Hello CA aspirants. Today we are going to learn a new standard, SA 250. Title is Consideration of Laws and Regulations in an Audit of Financial Statements. Let's see what we are going to learn in this standard. So the first thing which we are going to learn is the objectives of the auditor, and the second one is responsibilities of the management. Third is responsibilities of the auditor. Fourth is audit procedures when non-compliance is identified or suspected, and the fifth one is reporting of identified or suspected non-compliance, and the final one is documentation. Let's see what are the objectives of the auditor. We have three objectives. First one is we have to obtain sufficient and appropriate audit evidence regarding whether the entity is complying with the laws and regulations which have a direct effect on the determination of material amounts and disclosures in the FS. So these are the laws and regulations which have a direct effect on the FS. The second objective is like the auditor has to perform some specific audit procedures to identify if there is any non-compliance with other laws and regulations which may have a material effect on the FS. So these laws and regulations have an indirect effect on the FS. And the third objective is like auditor has to respond appropriately if he identifies any non-compliance or if he suspects any non-compliance. So these are the three objectives of this standard. Next, responsibility of the management. Responsibility of the management, the first responsibility is compliance with the laws and regulations. So it is management's responsibility to comply with all the applicable laws and regulations. So here generally it is the responsibility of management with the oversight of TCWG. So both management and TCWG combinedly will take the responsibility of this compliance. But in larger entities, it is responsible of other teams, like they have a internal audit committee or function or some compliance function. So these are responsible for the compliance with laws and regulations. So this is the first responsibility. Next, the second responsibility of the management is implementation of policies and procedures to prevent and detect the non-compliance with laws and regulations. So here the management has to implement some policies and procedures to prevent the non-compliance, or if there is already non-compliance, to detect them and correct them. So how will they do it? So first thing is they have to maintain a register. In that register they have to maintain all the applicable significant laws and regulations to that entity. And the second thing is if there are any complaints on the entity, they have to maintain a record of all the complaints. This is the first step. And the second step is monitoring the legal requirements. So what are the legal requirements applicable for our entity? They have to monitor. So for this they can take the help of legal advisors. And second thing is they can develop some operating procedures, they can design some operating procedures to meet these requirements. And the third thing they can develop is certain internal control system which they can develop and operate accordingly. So this is the second step. And the third step is code of conduct. So the entity has to develop and publish code of conduct for its employees, and they should give appropriate trainings to the employees to understand this code of conduct. And the entity also should monitor the compliance with the code of conduct by the employees, and the entity has to take certain appropriate action if the employees did not comply with it. So these are the policies and procedures which entity has to implement either to prevent or detect the non-compliance with laws and regulations. Next, responsibility of the auditor. In responsibility of the auditor, the first responsibility is the auditor has to understand what are the legal and regulatory laws or framework applicable to this entity. Along with that, he also have to understand that how the entity is complying with that laws and regulations. Once he understand that, then regarding certain laws and regulations which have a direct effect on the FS, he has to obtain sufficient and appropriate evidence. This is the first objective of the standard. So that is his responsibility. And the third objective is he has to perform specific audit procedures to identify any instances about non-compliance with other laws and regulations that may have a material effect on the FS. So it's a kind of indirect effect on the FS. So what are those specific audit procedures? Like either he can inquire management whether entity is complying with the laws and regulations or not, or he can inspect with the relevant licensing or regulatory authorities. So these are certain specific audit procedures which auditor can do. Next responsibility is maintaining professional skepticism. So auditor has to maintain professional skepticism while performing other procedures which may bring instances regarding non-compliance with other laws and regulations. So if there is any non-compliance, the auditor has to be alert while performing other audit procedures. And the final thing is he has to obtain written representations from management or TCWG regarding what? Regarding the known instances of the non-compliance. Like if there is any non-compliance happening in the entity, he has to get a written representation from the TCWG and management, and not only regarding the non-compliance and their impact and the non-compliance impact on the FS. Until now, we learned about objectives of the standard, responsibility of the management, and responsibility of the auditor. Now let's understand what auditor has to do, or what audit procedures auditor has to perform when non-compliance is identified or suspected. So when non-compliance is identified or suspected, the first thing auditor has to do is, first he has to obtain an understanding of the nature of the non-compliance. First he has to understand what is the nature of this non-compliance, and the second thing is what is the circumstances in which it occurred. The auditor has to understand these two things. Once he understood these two things, then he has to obtain further information regarding what is the effect of this non-compliance on the FS, because at the end of the day, FS is important for auditor. Once he obtains an understanding of all these things, then he has to discuss with the management or TCWG. If management do not provide sufficient information, the auditor can take legal advice. If auditor cannot obtain sufficient information, like he asked management, they did not provide, or even though he want to obtain more evidence, but he is unable to get, then he can modify his opinion. Next, reporting of non-compliance. So we have identified non-compliance, and now we are reporting the non-compliance. So to whom we have to report? So there are actually three parties. One is reporting to TCWG, and the second thing is reporting in the auditor's report, and the final thing is reporting to regulatory or enforcement authorities. So the first thing, let's learn reporting to TCWG. So while reporting to TCWG, the first thing we have to understand is whether the TCWG is involved in the non-compliance or not. If TCWG is not involved in the non-compliance, and whether if the non-compliance is intentional or unintentional, we have to report to TCWG immediately. But if TCWG is involved in the non-compliance, then the first thing auditor has to do is he has to report to the next higher level of authority, like any audit committee or any supervisory board. But if there is no higher authority exists, then we have no other option. We have to take a legal advice. Next, second kind of reporting, reporting in auditor's report. So the first thing is, if the non-compliance has a material effect on the FS, we have to issue qualified or adverse opinion. And the second thing is, if management is preventing the auditor from obtaining sufficient and appropriate audit evidence, then the auditor can issue qualified or disclaimer opinion. But the third scenario, where non-compliance is due to circumstances, not because of management, so then auditor has to understand the impact of this non-compliance on his auditor's report. He has to evaluate it. And the third reporting is reporting to regulatory and enforcement authorities. See, if auditor is responsible to report, then he has to mandatorily report. So that is his responsibility. So these are the reporting of non-compliances. And the last step, documentation. In documentation, the auditor has to document what are the laws and regulations that the entity have not been complied. He has to document that. And the second thing is, he also has to document the discussions with management and discussions with outside parties. And one additional topic, indicators of non-compliance. So in indicators of non-compliance, we have to see it like, if you see this transaction or this event, there is a chance there might be non-compliance. So let's see, the first one is payments related. So if there is any payment to some unspecified services or some government employees or to some related parties, there is a high chance of non-compliance. And the second thing is any unusual payments in cash, or any legal fee payments like in an unusual way, or if they are paying more and more in fines and penalties, or without any proper exchange control documentation they are paying. So these are all the indicators of non-compliance. Next, regarding sales and purchases. So the entity is paying excessive sales commission above market level is an indicator of non-compliance. Also, they are purchasing a very significantly above or very significantly below market price. So this is also one kind of indicator. And if they are purchasing from one country and paying to some other country, so these are all related to non-compliance. Next, related to transactions. So if the entity is like involving in any unauthorized transactions or any unusual transactions or with tax haven registered companies, so these are all a kind of indicators. Next, others. In others, there will be like there are investigations by regulators, or if there is any adverse content is publishing in the media. So these are a kind of indicators. If you enjoy this video, please like, share and subscribe. Thank you.